Welcome, everybody, to another Oreninc podcast series. This is episode number 33, and I'm joined by Mickey Fulp here in wonderful Vancouver. Mickey, thanks for joining me.
Snowy day in downtown Vancouver.
It is.
The trouble, it always turns to slush here. It doesn't freeze. It snows at night and rains during the day, but
it's dirty snow.
What it is.
It's dirty snow. At least it's not yellow snow, right?
That's true.
It's just gray and dirty. At least down here in downtown Vancouver. We're just sitting here at Preston's. We're about to enjoy a nice lunch here, talking about markets. And while we do that, we decided we'll record our next episode. As always, I'm just going to quickly start us off with the Oreninc Index, and you'll see very shortly that the Oreninc is actually increasing this week. Well, we're jumping up to 31 this week, based on the number of financings we're seeing this week, or having been announced last week. Actually, the total is over 30, it's 31 actually. But it's a lot of smaller financings, a lot of $1 million, $2 million deals. And speaking to company representatives here last week as well, a lot of them are trying to get the financings actually done before the PDAC curse hits. So just a quick open and close, small financings to keep the machine rolling. Start off with some programs. I've talked to Contact Gold, for example, and they're trying to raise actually $2 million quickly to keep the drill program going. And the reason is they wanted to do a bigger financing, but are waiting for the SEC to come back online after the shutdown in the US. So that's another interesting angle, like some companies are raising smaller amounts than they wanted to. Mickey, you are from the US.
I am.
Has this shutdown impacted you at all?
No, not at all. Never noticed it at all.
I just heard a couple companies filed their plans of operations with the BLM. They should be approved shortly, but other than that, there's not a big impact usually, right?
The NOIs, the notice of assessment, notice of intent, that's usually a 15-day process with the BLM, so they've gotten knocked back a bit on that. But to tell you the truth, I don't know why anybody would want to be drilling in Nevada at this time of year. Not only that, but northern Nevada. And I actually know two companies that are presently. And that's pretty cold there this time of year.
I hear it's like 1 minute it's snowing, the next minute it's sunny, that 30 minutes later it's snowing again, right? So
and the real difficulty this time of year, or soon to come, is the mud. So if it thaws, then the mud gets impassable. It's a difficult time to drill in northern Nevada.
True. But I think companies are trying to take advantage of the gold price environment right now, at least a somewhat positive sentiment, although it hasn't really trickled down to the juniors yet, or juniors, the junior explorers. We've seen some share prices move, but not as widely as we were hoping. So drill results help, but other than that, it's not a widespread. How do you call it? The tide hasn't helped raise all ships, right? Well,
the price of gold's taken a step back with a much stronger U.S. dollar. It went over 97 today, and gold's been holding up fairly well in spite of this rising dollar. It's probably up 1.5 or so.
I saw it at 13.06 this morning, so it might have changed during the day, actually.
Well, I'm talking about U.S. dollar, up 1.5% or so over the last 10 days, and it's knocked the price of gold down. I'm impressed by the fact that gold has not tested 1,300 yet. I think it will before it's all good to go. We need a weaker U.S. dollar. Interest rates are positive for gold, with now probably less than 2 interest rate rises in the U.S. this year.
If any, yeah.
Oh, really? You think maybe none? I think we're probably locked in for one for sure. The over-under has to be 1, I think.
Probably, so, yeah. I'll bet you a beer on it.
Yeah. Well, I'll take that. I'll take +1 with 1 interest rate rise. I really don't see that they won't do it. That would be backing off considerably. That means we've got a very weak U.S. economy, and I just don't see that happening right now. Certainly a weaker world economy.
No, jobs reports tell a different story as well.
And that has a lot to do with the strength of the U.S. dollar. It's not the strength of the U.S. dollar. It's the only thing people want to own. The euro is extremely weak. The loonie is extremely weak. British pound is weak with this whole Brexit cloud hanging over. So that's positive for the U.S. dollar, and that's not good for gold.
I was always of the opinion, or I always thought, like when Trump became president, he said he wants a weaker U.S. dollar to crank up exports, and so far it's actually the opposite has become true, right?
Yeah. So. Well, when he was elected, I'm trying to pull this out of my memory banks. I think the U.S. dollar was about 89. And it immediately, before he got inaugurated in early January, it went above 103 briefly in early January of 2017. And that's when he started talking about a weak U.S. dollar. And generally, when he talks about a weak U.S. dollar goes down. When he talks about last April, he said we need a bit stronger U.S. dollar. U.S. dollar went up. It was at 89, and now we're at 96 to 97, 95 and a half to 97. I think everybody wants a weaker U.S. dollar at this point.
Yeah, I think it'll help the U.S. economy, although the jobs reports I hinted at that earlier are quite positive.
There's a lot of things really positive about the U.S. economy right now, but we don't stand on an island by ourselves in the U.S., and the rest of the world's not doing especially well. China's not doing well at all, but they need to kiss and make up with the U.S. government, get this trade dispute settled, because I'll say this once again, I'm kind of a broken record, but Chinese need us a lot more than we need them.
Be interesting how that turns out in general. And while we get our food here served, China is actually a good point. Chinese New Year this week, and I've been to the Chinese New Year parade and all that, and China is off this week. How do you see that the market impacting copper based on prices?
Yeah, certainly.
Gold demand?
Copper's up this week. It hit 283 over the last week. It closed the day at 281 and change. It is definitely affected. If you look at the Baltic Dry Index, it's at a 1.5-year low right now, and a lot of that has to do with the fact that Chinese New Year comes in. So copper stocks are low, inventories that is, and
LME I've seen 3-year lows or something like that again.
Right.
So we're heading that way.
Well, worldwide lows, not only LME but Shanghai COMEX and LME well off, very low at this point. So copper's just waiting for the trade dispute to get settled. It's conflicted a bit right now. Once that happens, look out for the base metal complex. It's going to soar.
Yeah. Good point, actually. Before we get to PDAC and what's going on there, we got 3 weeks to go pretty much. What do you expect the junior market to do until then? I mentioned a lot of companies are trying to close their financings before that, and the PDAC curse. What do you expect?
Well, I go back to our seasonality charts, initiated in Toronto Venture Exchange at its inception, so now we're on we just completed year 17, and generally the Toronto Venture Exchange Index goes up until PDAC, and I expect that to happen. We're publishing in our notes to subscribers every week the seasonal trends of both gold and Toronto Venture Exchange, and we expect both of those metrics to go up until February 29th, if you will, or March 1. However,
I think the 28th is the Friday, because I'm flying to Toronto that day. Yeah. I think so.
No, 28th is a Thursday.
Oh, it's the 20. Yeah. No, it's the first. Okay, yeah, that's the
first of March is the Friday.
You're right.
So I'd be very surprised if the price of gold isn't higher on March 1st than it is right now, and also Toronto Venture Index. It would be unusual.
And you've been right calling the seasonality, obviously.
It's worked beautifully this year.
That's fantastic. We've been talking about it since November, and. But let's wrap this up here quickly. We always close with our number of the week.
I'll let you go first.
I'll go first, and it has to do with PDAC, because my number is 25. And that's what PDAC charges you this year per day to get into the conference, trade show, and investor exchange. I'm sure that
$25.
Canadian, I hope.
That's really cheap. So
no, it's a good deal, but I think it's going to cause some confusion, and that's why I brought it up. Because I'm thinking quite a few people of the 25,000 who are expected to attend or whoever are going to be confused about that, because the investor exchange access was free last year, and I think it's going to cause quite a few lines at the entrance.
That's interesting. As the speaker at PDAC every year, I get a free all-access pass, so that never quite occurred to me before. So.
No, it was free before, and I'm speaking as well, but I asked actually this morning whether I had to register as well. They're like, yeah, you get a free pass for your presentation, but that was pretty much it. You have to register for the rest, so I was surprised. That's why I picked it for the number, because it was been fresh in my head. What's your number, Mickey?
Well, I let the cat out of the bag already. My number is 29, and that's the 29th of February, or March 1, 3 of every 4 years. And once again, it's the idea that right before PDAC, both gold and Toronto Venture Exchange will hit seasonal highs, and then we're faced with what is increasingly known as the PDAC curse, where everybody sells like banshees the week of PDAC, and that becomes the high for the year.
Let's just hope it doesn't become true again this year. That's all we could say.
Yeah, I think all we need is strong metal prices.
That's true. And you said base metals are coiled. So should be interesting. Interesting times ahead. Mickey, as always, thanks for the time. It's always great sitting down with you. Appreciate it. Thanks.
Thanks a lot, Kai.